Welcome to FINAC Resources, and today we're presenting to you ratio analysis specifically for profitability ratios, which includes the gross margin, operating margin, and the net profit margin. Again, welcome to FINAC Resources. Profitability ratios, these are ratios that measure a company's ability to make profits. The common ratio profitability ratios include the gross margin, operating margin, and lastly, the net profit margin. Let us start with the gross margin. This is a measure of a direct profit that are derived from specific products or services. It is simply the gross profit as a percentage of revenue. Now, there are two things there, gross profit and the gross margin. The gross profit is revenue minus the cost of goods sold. Then the gross margin will be gross profit divided by the revenue times 100. So anything that is a margin will be multiplied by 100 to be a percentage. Let us see how to calculate the gross margin. And we are going to use an example from an income statement because, as you know, the gross profit and the gross margin must be derived from the income statements. So we have an income statement there of A2B2 Corporation for the year 20XX, and we have the net income down there as 1,870,000. The formula for calculating the gross profit, as we said, is revenue minus the cost of goods sold. And from this example here, we have the 3775 as revenues. Then we have the cost of goods sold at 450,000. When we minus those two, we get 3,125,000, which is our gross profit. Now our gross profit margin will be the gross profit from up there divided by revenue times 100, and our gross profit margin will be 82.77%. Important to remember, calculate the gross profit first, then you calculate the gross profit margin to get the profit margin or the percentage of the gross profit of the revenue. Another ratio is operating profit margin. It's a measure of profit that is left from a company's revenue after the cost of goods sold and other operating expenses have been deducted. The interest and the tax expenses are excluded in the operating profit margin calculations. So it's simply the operating profit as a percentage of revenue. And the formula, you have to calculate the operating profit first, which is revenue minus cost of goods sold minus operating expenses. Then the operating profit margin is simply putting as a percentage the operating profit by divided by the revenue. Then you simply multiply by 100 to get a margin or a percentage. So let us practice how to calculate the operating profit margin. We have the same income statement from A2B2 Corporation, and our formula for calculating the operating profit, as we said, is revenue minus cost of goods sold minus all the operating expenses, which in this case, our revenue is right there. Then we have cost of goods right there. Then we have our operating expenses all combined up there. Then our operating profit will be 2.713550. Then we take that to make a profit margin. which will be operating profit divided by revenue times 100, and plugging those numbers we get 71.78%. That's 71.78%. As again, remember when you are calculating the operating profit margin, remember first to calculate the operating profit, then when you're doing the operating profit margin, is getting that operating profit, dividing it by the revenue, timesing or multiplying by 100 to get the operating profit margin. The net profit margin. This is simply a measure of how strength a company is able to make revenue. It considers all the expenses that the company incurs, which includes the cost of goods sold, operating expenses, taxes, and interest expenses. So, the net profit is simply the revenues minus all the expenses. Then when we come to the net profit margin, net income margin is the net income divided by the revenue times 100. Two things to take into consideration as we look at these margin ratios. It is simply the percentages. So first we have to calculate the basic, which is the net income, revenue minus all the expenses the company incurs. Then the net income margin becomes the percentage of the net income over the revenue, or divided by revenue. Let us look at an example of how to calculate a net profit margin. We have a 2B2 corporation net income. The formula for calculating the net profit or the net income is revenue minus all the expenses. Here in our case, we have the revenues there, then we have all the expenses, all there in blue, then we get a difference of that 1.8 million. Then the net profit margin would be that net income divided by the revenue times 100. And in this case, we have 49.53% as our net profit margin. Very important to reiterate again is that the net profit is simply revenue minus expenses. That is the first to be calculated in these margin calculations. Then you come to the net profit margin where you use that net income, then you divide by the revenues as a percentage. We have come to the end of this presentation. If you have any questions, comments, please reach out to me. And also you can subscribe for more resources in finance and accounting at Binoc Resources. Thank you.